Hey everyone, welcome back to Grumpy Monkey Technical Trading. My name is Michael. Today we have a special episode. We have a review episode. So I'm going to take the three stocks that I've reviewed so far, Twitter, Chevron, and Netflix, and we're going to go back into the charts and see how my predictions turned out. Whether I did well, whether I did poorly. This isn't something I actually see a lot. Usually people kind of disregard their predictions after they make them. Now I want to go in and do the lessons learned. So what did we learn from the choices that were made? So let's start with Twitter. All right, so Twitter. My prediction was at the location of the red arrow. So I had said that if it couldn't get back through this solid blue line, it was tapping it, that it was going to go down again. That is exactly what happened. However, it went a bit farther as of today than I had predicted. I had said basically the blue line, which is where I purchased yesterday some shares in Twitter in my Roth IRA account. It proceeded to then nosedive a little bit farther today. So as it stands, I do have a small loss. Now at this point, I'm not panicking though, because I still have a lot of faith in Twitter over the long haul. I did buy it as a long-term play. And if I look at the stochastics for Twitter, I see that we're pretty oversold, so it should have a bounce back. Now, if I look at the weekly, you can see where I defined the range in which I thought it would top out at before, as well as the resistance point I marked for the last episode. You can see it's exceeded that now, but like I said before, I'm not nervous. One of the tricks I use to try and mark out a new bottom, because this is a bit of a unique situation where we don't have a lot of data, we only have till 2014, is I mock out the Bollinger Band, or sorry, not the Bollinger Band, the Fibonacci lines, as if we're going to make a bottom and try and find where everything lines up. So if I do that, if I drag those lines on, and I'll make them red just to distinguish them a bit better here, then you can see that I can line it up perfectly at the top here and the bottom here, and the zero line is very close to where we are. So basically my strategy at this point is to just sell some covered calls with a little saying a sell point somewhere up here, and then just ride out this bottom, and it should pick up again next week. So I'm not at all worried about Twitter, feeling pretty happy about my position. Obviously my position could have been a lot better, but I'll take what I have. All right, our next one was, we were going to take a look at Chevron. Okay, with Chevron, the show occurred at this red line, so at that point I'd indicated that this was a short-term resistance point, which turned out to be true. I had also indicated that I expected a pivot on Thursday, which did occur. That's here, and then the earnings occurred, and the earnings were extremely disappointing, so the stock then tanked. So I did miss it a little bit in that I said that the pivot point could be associated with continued dips, so more like this, and then it would pivot into the earnings release, and instead that it turned out to be the pivot associated with that. And that's one of the difficulties of the Fibonacci pivot points, is that you can often get the time, but you don't necessarily know going into it whether that's going to be an up or a down. So that's one of the challenges. I really should have got it though, because typically stocks do increase into earnings, and that's how things like saddle plays really are important for options, if you're familiar with that. But overall, not too bad. Pretty good on the predictions. It did tank. I'm kicking myself here because I looked at it yesterday and I said, this is an awesome reversal play. It's way oversold. I wrote it on a note to buy in the morning, or to put in a trade trigger for some options, and I did not see it in the morning. My son was really into Winnie the Pooh and I totally missed it. And then by the time I was headed to work, I looked up and it was already positive for the day, and I was like, oh, perfect opportunity missed. It's $1.16 today that it earned, so I expect a short-term rebound at least up until this level, and then we'll see. It wouldn't surprise me if there's still more settling back around this line, but certainly a nice one-day opportunity missed for a good payday. Now let's go on to Netflix, which is one of the weirder ones. All right, so for Netflix, I said there was still room to grow, but if you'd made a lot of profits, that it may be a good time to start thinking about putting on stop losses, because we may be entering a period where you'll see some retraction. But I did say there was room to grow, and that's exactly what Netflix did. I never would have imagined it was this much this soon, but you can see it really blew the doors off this week, rising into this support line and past it even. So that's really a crazy, not crazy, but a critical play here. It's really moved up. You can see in the stochastics as well that it's sort of doing this little hump thing, which indicates that it probably should recede at least a bit more. It's still not the end of the week. It's only Thursday, but it wouldn't surprise me if it retracted back under this line again. There was some, so I went and I tried to do a Elliott wave analysis, and so I had gone 1, 2, 3, 4, and was saying that this was probably the 5. I did have some response though saying that that wasn't accurate, that we were actually still in the 3, so we could still be capping the 3 out. But I didn't get any follow through from the person who was quite adamant that we were still in 3. So if we are still in 3, then we may be due for a 4. I did take a look at the daily and try and figure it out, but even the daily kind of led me a bit astray, as you can see. So this is the daily chart, and I started to mock it out. So originally how I described in the video, this would be peak 3, and then I was indicating this was 4, and then they were in 5. But when I looked between 2 and 3, I couldn't get the wave breakdown to work, indicating that I probably had made a mistake. And then when I started to make this 3, as is all described here, this would mean this is A, this is B of the backside of that wave, but then B just kept on going. So the gentleman who corrected me could very well be right, that we are still in 3, and thus 3 is kind of hard to nail down because we're not quite completed. If that's the case, then we're due for excuse me, a wave 4 retraction and then a continuation up to 5. So based on looking at that outward boundary that we saw in the weekly, we should be hitting some sort of resistance here that would be due for a retraction, but we could be in for at least one more cycle of a positive wave. All right, that's our show. So the predictions went pretty well this week. We had Twitter picking the resistance points pretty accurately and the reversal to go back down. A little further than I would have wanted, but I'm still happy with the play and looking forward to owning it in the future. We have Chevron, which did the reversal off of the preliminary boundary that I defined and then reversed per the Fibonacci sequence down to a level that I roughly predicted. Again, perfect reversal play missed. But that's just, I'll blame Winnie the Pooh on that one. And then Netflix, jury out on the waves. We could still be in 3, which would mean that we still have one big, probably up to go before a retraction. But I would love to hear from people with more experience with Elliott wave analysis. If you'd like to see any of those analyses, you can actually go, there should be a little eye in this video, which will have direct links, whether you're on mobile or on a desktop, back to those videos if you'd like to review them. Please subscribe to the channel. Please subscribe to the Twitter feed. If you have any questions about stocks, feel free to tweet me, and I will try and incorporate them into the video. So appreciate you watching, and see you again soon.